The Nasdaq, too, down nearly 2% today after a higher than expected CPI report this morning. And among those laggards are mega cap tech, Meta, Amazon, and Alphabet. But my next guest recently upped his price targets on all three of those names, especially Meta, hiking his target from $470 to $555, citing upside momentum driven by AI. Joining us now is Rob Sanderson. He's senior internet analyst at Loop Capital Markets. Rob, thanks so much for joining us. I guess let's start there with Meta, since that was kind of a big price target hike. And I guess maybe today, notwithstanding, explain some of your reasoning there for why you see the upside potential in Meta.
Yeah, there's a lot of momentum. Obviously, surprise on the upside, very strong fourth quarter, but the outlook was really what caught people off guard and really unexpected. Revenue growth expected to accelerate by around 400 basis points to 29% at the high end, which is obviously very impressive on numbers that are so large, and a comparison that gets 700 basis points tougher. An acceleration on that kind of comp at this kind of scale is just kind of unheard of. It shows a lot of momentum behind the businesses. I think they've found a lot of unlocks in applying artificial intelligence to make advertising easier. Like that's, I think, the underlying story behind all that momentum. And yeah, there's a lot to like at Meta.
Before we move on to some of your other names, I mean, I know AI is sort of the buzzword across all tech companies and really, I guess, almost all companies in general these days. But is there a risk as we go into this very potentially contentious election cycle of AI being used for not so good across social media platforms like Meta?
Yeah, and this company certainly has history on such issues. So it is definitely going to be a growing focus through the year. The company has invested a lot of time and attention and resources and frankly money in just keeping bad actors off the site. That's always a cat and mouse game. There's always going to be potential for ill intent on such a wide scale and influential platform, especially into an election cycle. So be assured, it's not going to come as a surprise. They're preparing for such interference, and we'll see how they manage through this.
What's working best for Meta?
I think it's the ability for them to make it easier for the long tail of advertisers. It's small and medium businesses that are really what make Meta the envy of the industry. They stopped disclosing this metric 3 years ago when they hit 10 million, and we should definitely assume that it continues to grow. There's a lot of focus on how the AI platforms are doing a better job of targeting for large advertisers. But it appears to me that Meta has really sort of cracked the code and is now unlocking a lot of value for the smaller mom and pops, and they are comparing against a pretty disruptive period where the changes on the Apple platform I think really took a lot of time for those smaller advertisers to adjust.
Rob, I want to move on to Google. I understand you have this as a hold, but you up the price target here from $140 to $155. Interesting, though, Google ads were up just 11% in the fourth quarter, while Meta grew their advertising revenues by 24%. So certainly not seeing at least as much momentum as Meta here. We have the Dow down, just to alert viewers, down 700 points now. That's good for 1.8%. But again, Rob, back to Google here. I mean, what do you like here that you see upward momentum getting us closer to 155 when maybe it does not have the same types of momentum in an area like advertising as Meta?
Yeah, I mean, the Google businesses are performing well, and management's very focused on cost discipline. I think the issue that maybe holds it back compared to some of its mega cap peers is that Google's seeing more competitive pressure now than we've seen for a very long time. And in the ad business, it's the growth in social and the big numbers that Meta's putting up. Retail media is becoming more of a competitive threat, especially Amazon. But really, the market's very focused on AI and particularly generative AI, as you mentioned earlier. And it's not clear that Google is going to be able to maintain their dominance. Like it has been the best technology company for a couple of decades, and now they're not leading the way. We just saw reports last night that OpenAI reached a $2 billion revenue run rate in the fourth quarter, the fastest company in history to do that. Google's been investing more in AI than anybody for forever, and here they are with a startup, stealing the show. So that's going to just, I think, raise this wall of worry for investors and probably hold the stock back.